Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Alex Crook, manager of the Bankers Investment Trust, to give his 3 stock picks. Hi Alex.
Hello.
So what's the first company you're highlighting today?
Well, it's the second largest holding in the portfolio, and it's called Delphi Automotive. So it's listed in America. It used to be General Motors car parts business. So a lot of car parts that go into cars in America, in Asia, and Europe. It has roughly a third of its market share. But what's interesting to me is it's all about the electronic architecture of cars. I do feel cars increasingly going to more electric motors, but also the technology within the car. So the cabling, the connectors, they'll all be Wi-Fi'd up and have other technologies within there. So Delphi, I think, is perfectly placed to take advantage of that. They have a lot of market share in those key areas. And I think just therefore it looks a very interesting stock.
The automotive industry in the US is often a barometer for how well the economy is doing, and both look good. However, there are some concerns about the US economy. Some people say that there's too much contagion risk with other parts of the world. If the US economy was to slow, how at risk would this stock be?
I think fairly limited. For starters, it's got international exposure, so we would hope some of that slack is taken up in Europe, where we should see some more positive action. European car sales definitely bottoming and coming up. And the American economy, though, is quite self-contained. They call it more of a closed economy. It doesn't export an awful lot. Therefore, really, it's about the dynamics within the US economy. And I think we're still seeing positive results in terms of lending. So again, it's very key. A lot of cars are sold on a finance deal. So are the banks lending there? And they are. And so there's also a lot of stock that needs replacing, because in the previous crisis, people kept their cars a little bit longer. And again, the technologies of hybrids and electric motors, I think will just drive a replacement cycle that's a lot quicker than we've previously seen.
And what's the second stock today?
So the second one I'd like to talk about is Amcor, which we're going right the other side of the world now in Australia. So it's an Australian listed company, but again, a global player in packaging. So particularly plastic, rigid and flexible plastics for fast moving goods. So beverages, foods, tobacco, all sorts of things like that. And again, it's the same sort of theory. I do see a little bit of growth appearing in the world, and the markets are very sceptical of these international stocks that play into that. So just like autos, I quite like, just consumer goods, people spending a little bit more on their products. But what Amcor is great is it's all recyclable, a lot of technology actually coming into these products to allow them to be recycled very efficiently.
And how dependent on individual companies is that company? So, for example, does it have a big deal with Coca-Cola? Should it lose that one client, would it be responsible for sort of 75% revenue loss, etc.?
It shouldn't be, because the scale of these customers, they're all the international names that you know and love, and they actually embed their packaging plants almost next door or within the factories. So it's part and parcel of the process. So it's almost very difficult to extract them. There's obviously tough decisions about the pricing of products. And again, with plastics, the price of oil falling, there should be some gains to pass on to their customers. So those are the tricky conversations, but I think really their market share, if you look at the cash they generate, just keeps growing. It supports a 4.5% dividend, and the company's strategy is to produce a 10 to 15% shareholder return for us. So 10 to 15% with a major player, I think is quite a good trade-off in these markets.
And what's the third and final stock?
So now we're going a bit more emerging market. We go to China, and again, it's often perceived as very volatile, a dangerous market. But we actually, within Bankers, have access to the A-share. This is the local domestic market in China. And I'd like to talk about Yutong Bus, which is the #1 manufacturer of sort of 6-metre, very large buses, but particularly their dominant market share is electric buses. So China's definitely on a reform package of environmental standards, trying to clean up the air. And one of the key aspects, the largest polluter of the air in China is the buses. They're old diesel engines. And so I think they have 30% market share in electric buses. Again, it's the same characteristics as Amcor, big cash generation, a lot of cash in the balance sheet, so it's not at risk, I think, to fluctuations in markets. And again, the international market is new to them, so could they open up in there? I think they can, yeah.
Alex, thank you very much.
It's a pleasure.
This is Emma Wall from Morningstar. Thank you for watching.